Hey guys, welcome to the course. So in this lecture, we're gonna be learning about the composite operator, all right, and understanding how smart money behaves. Okay, so this concept will change how you think about the markets. Okay, so you must be wondering like, what is this composite operator? Uh, or smart money, or institutional buyers, or institutional traders that we have. Who are these people? Okay, so the definition of the composite operator is, Wyckoff actually categorized them more than 100 years ago. And what this is what he says is that the composite operator is Wyckoff's term for large institutional players. We call them smart money. Remember smart money concepts, or ICT, or inner circle traders, like all those concepts, they all come under the umbrella of large institutional players or the smart money. And it's not just one person. Okay, it's the collective action of banks, hedge funds, pension funds, all the big players who move the markets. Okay, so think of a shadowy organization pulling the strings in a movie. All right, and the institutional problem is that they can't trade instantly. Okay, you need to understand the people who are we are going uh like, let's take it, you war with, because like as you're putting money in the trade, like you're basically going in war with them. Or if you know that you can't win against them, like let's join the let's join the army of banks, or like institutional traders. So we actually learn how they behave, how they act, and then we learn from them, and then we can actually be a smart money player in the market. Okay, so one of the problem that they have is that they can't trade instantly. Okay, the composite operator can just buy or sell millions of shares instantly. Okay, why? Well, if they did, price would move against them. Okay, because they are actually moving a lot of money, instantly. So the market will react to their volume. Okay, so the price would move against them. All right, they pay too much price to buy, and they get too little when they're selling. Okay, so the solution is that they accumulate positions slowly, quietly, and over time. Okay, but when everyone else is selling, fear low prices, distribute when everyone else is buying, greed or high prices. So they actually slowly accumulate the position over time, and then when everyone else is selling, when the price is down, when everyone else is selling, fear the low prices, so they are buying when everyone else is selling. Okay, the retail traders. All right, and they are distributing when everyone else is buying, which is greed or high prices at the top. So right from there, that, like, accumulation and distribution, what are they? All right, so accumulation, this is the building positions where smart support zone is called institutions buying. Okay, volume declining, support supply is being absorbed. Okay, so this looks like nothing is happening, but institutions are quietly buying. Okay, so I'll show you what it means. Okay, support zone, institutions buying, right? So I'll come to the chart, and like I'll show you that this right here is your support zone, institutional buyers zone, right? You can see, um, where's my pen? Anyway, yeah, let's use that. So here you can see this is your institutional buyers. Yeah, right. So this is your accumulation zone, this is your distribution, and we're going to learn more about that, in the upcoming lecture. So you don't need to worry about that much. But I just want to show you guys, as soon as the prices comes around here, you see this big surge in the volume, right? So uh, so this looks like nothing is happening, but institutions are quietly buying. As we see volume declining, supply is being absorbed. Okay, Now distribution, we're exiting positions. All right. This is a resistance zones where institutions are selling. Okay, volume is declining and demand is being satisfied. So price is making new highs. Retail excited, but institutions are selling. Okay, and you can see it in the chart. Here you see price tries to make new high here, but then quickly institutions are selling. You see this big volume there here, right, on the downside. So the institutions are selling very high. Okay, very high selling, you see, right? Now, how we know is that how we know from retail to institutional traders is that we actually figure it out by a volume, because volume tells the truth. Okay, and price can lie, it definitely lies, but volume reveals the truth. And when institutions are active, volume tells the story. Okay, so when accumulation happens, volume shows supply being absorbed by institutional buying. Okay, when distribution is happening, volume shows that demand is being satisfied by institutional selling. Okay, you can see it here. When there was, see this buying occurring, volume was very low, and as it increased there, then higher volume on the downside, sellers coming in and distributing their positions. All right, distributing the stocks, or and then taking profit around here. Again, they're distributing, so their distribution ended around here. Now they are accumulating. You see this big accumulation zone. So so you can actually see it happening in real time. Okay, so yeah, and I'll teach you guys in detail later on. Okay, now one thing you should learn from this is that we must think like institutions. Okay, because they're the one who are making big profits. Okay, uh, we need to change our perspective, and you know and don't ask that what do I think will happen. We must ask that what is the composite operator doing right now. Okay, right now what the composite operator is doing, tell me. Ask that question. All right, so the practical application is that, are they accumulating? Be buyers, but wait for the right entry. Okay, so here basically what we are asking is that you know here is are they accumulating? And we need to be buyers, but wait for the right entry. So if we know that, from this point onwards, all right, and one thing you guys gonna see in this course is that I'm gonna only teach you guys in forward testing. We're not gonna do some back testing where where we have all the data and yeah, doing back testing and stuff. It's just a walk. You know it actually creates a look ahead bias, which actually messes up with the trading and stuff. So remember, always do forward testing. Okay, so let's get started. Let me run this, and you see, as soon as it happens, we see this accumulation zone forming there. And let me actually extend that there. uh, Extend to the right, extend to the right there. Okay, so yeah, it's plotting a lot of different lines. Let me actually just remove that. mm. I actually don't want to distract you guys. So um, this is accumulation. All right, so let's actually see when the market comes to this institutional buying or selling, market comes down there, you see. So if this is accumulation, I'm gonna wait for the market to come around my accumulation area. See this institutional, are they accumulating? We know, okay, if they're accumulating, we will be buyers, but we will wait for the right entry. Right entry is either here or here, and we'll see. We missed this one, but we're gonna be entering around when the market comes around here. Okay, So see, institutional sellers comes in, again some buying occurs. You see this big volume there, right? um, then the market comes down, and then you see big volume coming in. So we would be buying there, right? And then like put our stop loss there, put our take profit around there. All right. And this is what the trading is, guys. Like, you see. So you can see that, right? As it converts, in institutional buying, market phase started, and then markets just went up. Okay. So I'm gonna teach you guys all these concepts in real time, and like wait for the you know some nuances to come in, and you're gonna love it, guys. Like, yeah. So ask questions like, are they distributing? Be sellers, but wait for the breakdown. Okay. See, this is what it's telling you. Okay. Be sellers on the distribution zone. Okay. But wait for the breakdown. You see, this was the breakdown. Okay. Here it's telling wait for the breakout, like that. All right. So um, another question you might ask is that, like, are they reaccumulating in an uptrend? Add to longs on pullbacks, right? Or are they redistributing in the downtrend and add to shorts on the bounces? Okay, like this. If they are distributing on downtrend, like add the short on this one, right? Around here, then around here. If it's accumulating, then we'll add to the long after the pullback. You'll see this was the pullback, right? We will add to the long position around there. You see, there institutional buying occurred, so we will add to the long position there, and then the market goes up. All right. So this indicator is like a GPS. Okay. It the reading the signals is that, like, this one indicator reads the same signals as Wyckoff thought. Okay. Price action patterns, volume behavior, phase transitions. It shows you what the composite operator is doing automatically. You don't need to change anything, like you don't need to put any other indicator, right? It just, it knows what you want, what the composite operator is doing, and it adapts to that. Okay. So, but you must understand why. Okay. What you need to understand is that the analogy learning to drive with GPS. Okay. GPS tells you where to turn, what you need to understand the rules, but GPS tells us that, like, where to turn, and like you know we all have used Google Maps. All right. It tells you, okay, take right on that road, or like take soft left, or like that. But we still need to understand the rules of the road. Okay. Or you'll crash eventually. All right. The indicator is GPS. It helps, but you need the fundamentals to understand it. Okay. And that's what I'm going to be teaching you guys in this course. Okay. So the key takeaways from this lecture is that the composite operator concept teaches us that the market are moved by the large institutional players. Okay, they leave tracks in price and volume. All right, and then we can read those tracks with this. You can read those tracks literally. Okay, uh, but we need to align with what they are doing. Then only we have an edge. Okay, we need to align with what they are doing. Okay, so what's next is that in the next lecture I'm going to be teaching you guys about supply and demand fundamentals, and the foundation that everything else is built on. Okay, so let's read the tracks of the market and see what smart money is doing and align with them. And guys, follow the money. Okay, you will make money. All right. So I'll see you guys in the next one. Thank you.